Hello viewers, in this video I'll be going over Gold Miners Jr. ETF ticker symbol GDXJ. Today we are down 30 basis points and we have about 2 hours and 30 minutes left in trading. On the 1 hour chart we were at overbought RSI, now we just gone out of it. On the 4 hour chart we are near overbought RSI as well, but we do see possible support on the 9 moving average, and if we do remain above this price action and not dip below it or have the candlestick dip below 9 moving average on the 4 hour chart, this uptrend is still intact. And on the daily chart we are not at overbought RSI yet, but we do see a convergence on the MACD, so that's positive for the bulls. So what we have is I'm looking forward to the 9-day moving average to converge onto the 18-day moving average. Currently it's below. The blue line is the 9-day moving average and 18-day moving average is the purple line. So a possible support that we see is when we do fall back, the 9 and 18-day moving average should be slightly together or converging, and I do see a possible support around the price of, I would say, $40, and that also coincides with past price action that dated back to mid-July. So if we do fall back, that's a possible support. And as for resistance, if we expand out to multi-year, we see a resistance that dated back in, I would say, February 2017. So if you mark that as resistance, and that resistance also coincides to where we left off in early August or August 7th. So if we were to move on higher, that price action is roughly around, so let's expand out further a bit. If we were to move out, move up higher, that is roughly around 80 basis points. And if we were to move down lower, that price movement is around 5.3%. So if we move to the forecast model, I'll go day by day, where GDXJ or Gold Miners Jr. will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecasts we should focus on? Ideally, the model that closely relates to the current trend. We have the current trend right here, and I believe this trend is the best match for it. And this trend dates back to July 21st, 2010 to October 14, 2010. So let's point out why these two charts are similar. So what we have in the beginning of the trend, we start off above the middle Bollinger Band. So let's just state that right here. And next we touch the upper Bollinger Band right here. And all instances where it touches upper Bollinger Band, it's going to be a green circle. And then once more, third time, and then finally where we are near, not quite touching the upper Bollinger Band, and in between the two right here, we revert back to the mean, or we touch on to the middle Bollinger Band, and then previously right down here as well. So we see those patterns, and then for the trend in question, we see in the beginning we start off above the middle Bollinger Band, and then we touch the upper Bollinger Band right here, and let's just mark all the upper Bollinger Bands first. So we have this one here, another one around this point, and then finally once more over here as well. And now let's mark where it touched the middle Bollinger Band. So we have one near the beginning of the trend, and then another one near towards the end. So what we have is 1, 2, 3, 4, 5, 6, 7 points. We also have 1, 2, 3, 4, 5, 6, 7 points. So if there's reason to believe if the trends and patterns are the same, the outcome and forecast should be fairly the same as well. So the trend that we just examined was July 21st, 2010 to October 14, 2010, and it looks like back then GDXJ was down roughly 4.15%, so we may fall down a bit and hit that support line. And here's the line trend that I compared it to. This is the current trend, and overlapping it is the 2010 trend. So that is all. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.